Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everybody, checking in on the market rundown, looking at SPY, IWM, and QQQ. And before I get into it, I've received a couple of comments recently, which certainly are warranted, but one thing I want to point out is we are not utilizing these 3-minute long videos at the end of the day. This is not enough information to be basing your trading game plan off of. So I'm pointing out key levels and I'm giving a little small taste of technical analysis, but during the trading day, I'm covering live for 2.5 hours and we're giving continuous coverage in the chat room as things are playing out. And I know everybody can't be in the chat room as we've got full-time jobs and all that, but just want to point out that, for example, let's say we had the QQQ strong close 2 days ago and then a bearish day following it, and we closed down at the low of the day yesterday. We knew we had the presidential speech coming after hours. So personally, that's a scenario where I'm all cash at the end of the day. I don't like the coin flip where it's just a complete guess what the market reaction will be to the presidential speech. Obviously, it was a bullish reaction in hindsight, but I want to be all cash and I want to just head into each day with a nice, fresh, clean slate where I can utilize the up-to-the-minute information to make a decision based off of. So obviously, we saw a ton of strength, and the bulls were in full control today. So heading into today, we very clearly would not have been bearish because we knew the market was seeing all-time highs and was extremely strong. So the pre-market setup and going over, I spend an hour and a half each morning before the bell even rings, going over all different time frames and all different setups and really just doing homework to prepare for the trading day. So I don't want people to think that these little 3-minute videos are enough to base trades off of, because they are not. Hopefully people have their own technical analysis abilities that they're really just using this as a kind of comparison for. But if you're looking for entry and exit levels and strategies in that sense with these 3-minute videos, that is not a good idea in my opinion. So we had a huge bull day on SPY in reaction to the president. Gap up, all-time high. There's absolutely no slowing down. Any bear looking to find the top has been slaughtered in 2017. We need to wait for bearish signals. We know they're going to come for consolidation, which will be normal and healthy, but we're not getting any signal of those signs just yet. So we have a little bit of an upper wick of profit taking at the end of the day. It was not significant by the close. I'm watching hourly moving average supports. We're still holding exponential hourly supports on SPY. We've got the 20-period support catching up. So no sign of weakness as far as I'm concerned overall on the S&P 500. After seeing a 1.5% day to the upside today, could we see, 0.3% pullback tomorrow? Absolutely. But as of right now, we're not going to see this uptrend on the daily time frame break anytime soon. There's a gap at 236.95, and it would require a break of 236.01 to break the higher low pattern currently on the daily time frame. So we could pull back all the way to 236.50 and then continue the uptrend, and it would just be another higher low. So keeping that in mind, the 6-week extreme bull move here, and RSI levels indicating overbought conditions. But again, when you're in blue sky breakout, those RSI levels mean a whole lot less. So give up a little bit of the reward. We don't need to hit the exact top. We can see signals of weakness and then be looking bearish, and that gives us a resistance level to be playing off of. The all-time high at that point will be the level that we exit any bearish positions. But we can give up, 0.5% to the downside in order to give up a whole lot of risk trying to time the top as the bulls keep running with it. So IWM with a new all-time high, a little bit more significant of an upper wick. And yet again, every single video I do here, we see a scenario where IWM is just a little bit slightly more bearish than either of these two names. So when we do get market consolidation, IWM downside will be anticipated to be a little bit more lucrative than it will be on SPX or QQQ. So the new all-time high is 140.86. Middle Bollinger Band support held 2 tests earlier last week and this week. So that's a key level going forward. It's 137.90 and ascending. Bulls in full control. Weekly time frame holding exponential support. Very strong, fending off that bearish MACD cross. No sign of weakness. QQQ, new all-time high. Big spike in volume here as well. So highest volume we saw in February, pretty much, and same thing for the S&P 500. So QQQ consolidated, normal and healthy and sideways, held exponential support, continuation to the upside, higher highs, new all-time high. 131.68 is resistance. The gap is at 130.45. So if we do get signals of profit taking and consolidation on hourly time frames on both SPY and QQQ, we will be looking to fill the gap. That will be one of our first targets. So 236.95 for SPY and 130.45 for QQQ. So the weekly time frame is negating the bearish reversal doji from last week and continuing strong. And the more cautious traders are not going to be playing anything bearish in any of these markets, not only until we get a bearish reversal candlestick on the weekly time frame, but until it gets confirmed. That's what a more cautious trader is waiting for. And we have not seen any sign of confirmation of any bearish candlesticks in a very, very long time on both the S&P 500 and QQQ. So no signals for the bears just yet. Bulls in full control. And are we overbought? Absolutely. Would I be holding bullish positions overnight? Personally, no. I would be cash at the end of the day because I know we're extended. I know consolidation is coming any day now, and I don't want to be buying at the top and trying to swing overnight just before we do see that consolidation. So personally, as a day trader, I like cash overnight. I don't think about the market at all. Well, I do. That's a lie. I think about the market all the time, but I don't stress about the market at all when I am trying to sleep at night because I know I can look at everything from a fresh, clean slate and establish a new game plan the next morning. So I appreciate you watching. Feel free to ask any questions, and I will see you all tomorrow as we start to wrap up this extremely bullish week.